Hey, what's up, stock compounders? Brad here. So it is that time of the week again, question and answer session, and it has been quite a week. Charlie Munger buying Alibaba through the Daily Journal Corporation. We had Lulu give a Q&A through Columbia Business School, which he does so infrequently. I think maybe a couple times in the last couple decades. So pretty exciting stuff this week. But let's jump into the Q&A, okay? First question, I asked myself this question. I don't know why I did that. This is kind of a difficult question. It seemed fun to ask it, but now I have to answer it, which isn't that fun. But SC wanted to tweak it a little bit. What do you believe about investing that most good value investors would disagree with you on? The first thing that comes to mind here is I don't necessarily believe you need to understand a business to invest in it, to do well with it, okay? That is very controversial among the value investment community, but I think there are other ways to gain an edge in investing other than an edge you would gain just by understanding the business better than most others. Pabrai kind of talks about this when he says, intensive stock research can be injurious to your financial health. Just a belief that I have that's not many people would agree with me on. Next question, any idea why Munger would buy his Alibaba position on the US exchange instead of Hong Kong? This way he is able to circumvent any risk of Baba delisting in the US. So the issue here is that as a foreign investor, there are rules in China about what foreign investors can and can't own in terms of Chinese companies. And from what I understand, technology companies are on the list of companies that foreign investors aren't supposed to be able to own, okay? So the creation of this VIE in the Cayman Islands is a way to get around that for US investors to own Alibaba. Buying through Hong Kong, it's still potentially shady as a U.S. investor to buy through Hong Kong. And I don't know, maybe there are certain rules about the Daily Journal that doesn't allow the purchasing of, securities outside of the U.S. I don't know exactly. But, Munger, he's a lawyer first and foremost, right? That's what he studied. That's what he worked in before he got into investing. So, if Munger is buying Alibaba, you got to imagine. Of course, do your own work, but you got to imagine Munger knows what the risks are, right, with the VIE versus going direct through Hong Kong. So I hope somebody asks him this. He's probably not going to answer it until maybe he gets out of Alibaba. But it would be fascinating to hear Charlie Munger discuss this whole situation. Next question. What was the most important takeaways from today's Lulu talk? I hope you do your Q&A. So I did post that yesterday, kind of my highlights video for Lulu. Most important takeaway, and I shared kind of 5 takeaways, but what's really sticking with me, this is something I tweeted, is this idea, if you can buy more of a company as the price is falling, it's a pretty good indication that you are confident that you understand the business, right? You have a high level of conviction in that business, and you're not looking for the price to kind of reassure you, price going up, that it was a good investment. So, I think that there's a lot to be said for that. But yeah, check out that video I made yesterday. action-packed with gems that I took away from that talk. Personal question: how would you manage an elderly parent's retirement if they were terrible with their own savings and they asked you to help? Boy, that's tricky. I mean, whenever you're managing money for family, you're adding a whole bunch of, baggage potentially on top of, if you were just managing it for strangers. So I probably wouldn't. I wouldn't help my parents manage their money. I would probably do my best to give them the tools that I think would be particularly helpful, but I don't think I'd want to get directly involved with that process of helping them invest. It just sounds like potentially putting extra baggage on that relationship, which I'd hate to do with someone like my parents. So hope that helps. Did you read the 10K for Baba, or was this a pure clone of Munger? So, I've read some of the 10K. It's 386 pages, I believe, if I'm remembering correctly. I haven't read every page. And I've done some work on Alibaba in the past. You can see I put out a few videos about it. But I'll tell you, seeing Charlie Munger buy in, I mean, it really tipped the scales for me. Where I was kind of on the fence before, definitely gave me that little extra boost of confidence I needed to go in. So that's what that Munger buy did for me. If you could choose one fund manager to manage your portfolio for the next 20 years, who would it be? Oh man, that's tough. I don't know that I've found that person yet, and I'm really looking for that person. I want to find these kind of smaller managers who I'm really bullish on. So I haven't quite gotten there yet. Again, Rosenblum from Bonsai Partners is, fairly high on the list. I've done a video in the past where I kind of asked all of you for, fund managers that you're cloning. And I've got a lot of names that I still need to work through and do a little work on, what has their track record been like? Can I get my head around their investment approach? So this is right at the top of things that I want to tackle, okay? I really want to come up with a short list of kind of investors to clone. So thanks for that nudge, Frank. Let's see what this reply was, just out of curiosity. Opinion on passive active investment. So investing with an active manager. Yeah, obviously there's managers like Warren Buffett. There's why am I blanking on his name? Anyway, there's a lot of opportunities to do this, but I haven't quite found the right fit. Seth Klarman, not someone that's very accessible to the retail investor. So yeah, I'm not sure who it is yet, Frank, but thank you for the poke to figure out who that would be, because I think it's a really important question for me to answer. Not necessarily just the one, but maybe a handful of fund managers. What's the best advice for someone starting investing in their 20s? Well, first of all, awesome. Kudos for starting in your 20s. I wish that I had started in my 20s. I'd say the best piece of advice is figure out who the best investors are. The best investors who have an approach that resonates with you, that kind of fits your temperament, okay? And really learn as much as you can from those investors, but give yourself a set amount of time. Say, all right, for 3 months, I'm going to drink from a fire hose from Buffett and Klarman and Howard Marks and, whoever else, Monish Pabrai. And after that 3 months of intensive study, I'm going to make my first investment. And it doesn't need to be half of your, savings. It probably shouldn't be, right? Maybe take 5% of what you'd like to invest over the next couple of years and say, all right, I'm going to make my first investment in 3 months, okay? And the reason for that is the learning really starts after you become an investor, after you buy your first stock, you buy your first company. Before that, it's all theoretical, okay? Your emotions aren't really involved when it's theoretical, okay? Once you have skin in the game, once you put money down on an investment, this whole other realm of investing comes to life. The emotional side of investing, the psychology of investing. And you're not going to learn anything about that until you put money in. And that's really where the rubber meets the road. So start very soon, okay? Maybe give yourself a little window to learn, but make it short. Make it on the short side. Don't make it a year, okay? Make it a month, maybe a couple months, and then get in the game. And that's really where you're going to do the majority of your learning. So that's what I would say. In his recent Q&A, Pabrai mentioned Baidu as a spawner amongst Alibaba, Amazon. It looks like Baidu is a much smaller cap company than Alibaba. Do you think it is worth to look deeper into it? Yeah. I mean, one thing you can do, go to Dataroma, type in the ticker for Baidu, I think it's BIDU, and see what super investors own that company. Obviously, Charlie Munger bought Alibaba. He didn't buy Baidu. And of course, there's David Tepper, there's Ray Dalio. Ray Dalio probably owns some Baidu, but look at level of conviction, right? This is kind of the easy first step when it comes to picking which Chinese companies to invest into. What are the great investors doing? What are they buying? So that's where I would start. So until I see that, until I see a great investor that I follow buy into Baidu, I'm not interested. I'm going to wait until I can bowl with bumpers and say, okay, this great investor has bought in. Let's take a look. That's my kind of lazy and smart approach to it. Yeah. Out of your common ways of finding stock ideas, like how many super investors own it, Value Investors Club write-ups, insider ownership, magic formula screener, what do you consider most important? I really like this question. So to me, the most important is the super investors who own it. Okay, how much respect do I have for them? How much do I understand their investment process? What kinds of companies they're looking for? How long are they wanting to hold those companies? What level of conviction does it have in their portfolio? Super investor activity gives you so much information about whether a company might be worth looking deeper into or not. At least it does for me. So this is a clear winner for me, especially kind of my most important super investors to watch, like Lulu, Monish Pabrai, Charlie Munger, Warren Buffett, Seth Klarman. Those are kind of a handful. There are more, of course. Hey, Brad, what do you think about Alibaba's competitors, JD and Pinduoduo? Would love to hear your opinion on how Alibaba will keep at the top. Thank you. Yeah, Pinduoduo is one that I'm starting to look deeper and deeper into. I don't know much about JD.com. So Yeah, I'll probably make some follow-up videos about Alibaba. There seems to be a lot of interest. So I'll probably touch on these topics in some of those videos. Um, yeah. Have you added bought new to your SPAC positions during the sell-off? So I haven't. And actually, when I bought Alibaba, I sold off one of the SPACs, Avanti, AVAN. It was down a couple percent, I think, but it was really, I was treating it as a cash alternative. So once there was an opportunity to deploy that cash into a long-term investment like Alibaba, it was an easy decision to kind of liquidate that. But I haven't added any more to my SPAC positions. And you might be thinking, well, that's odd because the price of SPACs have been coming down. So, in light of that, there are potentially more compelling opportunities now than they were a month ago. And the reason I haven't been buying new SPACs is, I did some soul searching, I did some sitting with it, and the pace, the speed of the SPACs, and having to constantly keep track of what was happening with those SPACs, I could feel it starting to change my investor psychology, and I didn't like that. It was kind of condensing my time frame for how I'm looking at these investments in the SPAC arena, and it was kind of getting me away from spending time kind of learning about businesses that are the long-term compounders, right? The businesses that I want to own for decades. That's really where I'm going to make my money, not in these kind of quick flip SPAC plays. So I realized I'd kind of gotten sucked into this, short-term frenzy in the SPAC arena. I still think I was playing it in a fairly safe way, upside without downside. Heads I win, tails I don't lose much. But it was taking up a lot more of my mental bandwidth than I thought it deserved. So I decided to get a little bit of space from it and get back to good old-fashioned value investing in terms of trying to find businesses that I want to own for the long term. So thanks for that question. Any thoughts on the upcoming BarkBox SPAC? I'm not aware of that one. Yep. So no thoughts on that. But thanks for the question there. If you had a 10% position that ballooned to a 30% position, how would you think about whether to trim it or let it grow? So Pabrai, how Pabrai would answer this, and Pabrai is my mentor, so I like to parrot Pabrai. I think most of what he says is very wise. Pabrai would say, say you bought Amazon, right? You were smart enough to buy Amazon back in the early, even mid-2000s, and you put a 10% stake down on Amazon, and it became 90% of your portfolio, okay? What Pabrai would say, if the business is getting better, which it is, Amazon is still getting better today, he would say, even if it looks overvalued, looks overpriced, looks expensive, let it ride. If it's getting better, if the business is getting better, let it ride. Don't trim it. So to me, a 30% position, that's not really ballooned. Okay, to me, that's like, okay, it's 30%. That wouldn't faze me at all. I think of Bonsai Partners, and the manager there, I always forget his name, Rosenblum, Andrew Rosenblum. I think a couple of years ago, Andrew Rosenblum bought a company called Redbubble, which is like the Etsy of Australia, like Etsy 5 years ago. And Redbubble is like 60% of the portfolio now. And I'm guessing Andrew didn't make more than a 10% bet on Redbubble. It's just gone up so much. But he's not selling. He's not trimming, okay, at 60% of the portfolio. And I respect that. I think that's wise. If you understand the business and it's getting better, right? So that's something I've learned fairly recently is let your winners ride, okay? If the business is getting better and better, don't cut the flowers to water the weeds, okay? That's a learning that Warren Buffett got from, I'm blanking on the name right now. I'm sure all of you know what I'm talking about, even though I don't. Don't cut the flowers to water the weeds. Don't sell off companies that seem like they're getting expensive to buy stocks that look cheap. That's often going to be a mistake. I went to high school in the 70s and wonder why they didn't teach us kids about money and personal finance. Gonna get me worked up here. I was fortunate to have parents who were amazing at stretching their dollars. Do schools teach personal finance these days? I have noticed a lot of people are getting into serious trouble with their money. Yeah, and you can read the replies. People know I get fired up about this topic. I don't know. I'm not in school right now. I mean, I'm 39 years old. I haven't been in school for like 15 years, okay? That was college. So I haven't been in high school for even longer. I don't know what they're teaching kids in high school these days. If I had to guess, I would say it's no better today than it was in the late 90s when I was in high school, which is terrible. I think it's such a disservice to our youth that we don't have courses on investing and personal finance. The issue is a lot of teachers don't know about this stuff either, right? They're employees, they're working 9 to 5. They're not investors. They're not entrepreneurs. They want a 9 to 5 job. And the kids they're teaching, a lot of what they're teaching primes students for the same thing, to get a 9 to 5 job and to not really have mastery over their finances. So things need to change in many ways, many facets. So I don't know. I would guess that they aren't. I'm pretty sure something that's going to come out of this channel, out of my investing career, is going to be some kind of after-school program, some kind of program for at-risk youth that teaches them this stuff, okay? Teaches them by doing. So I'm excited about that. I'm excited for the potential of that kind of program, but it is a crime. It's a crime to let students take out debt to go to college without giving them any kind of education about what that means. Any kind of realistic forecast of what they're going to be earning once they graduate with that degree versus, how many years is it going to take to pay off their debt based on that income from that job. So it's a mess. It's a mess. I think we're going to see something happen around student debt. I don't know if it's going to be student debt forgiveness or what it's going to be, but that whole thing needs to be radically disrupted. If you could only own one of the companies in Buffett's portfolio for the next 10 years, which one would you own? I assume you're talking about at current prices, but I guess I'd say Apple. That's something that's shifted a little bit recently for me. I'm going to talk more about Apple in future videos. But Apple, it's incredibly strong company. The brand, how much cash they have. They could really disrupt some industries. So we may just be seeing the beginning of what Apple is poised to do over the next decade or two. Not a question, but Lulu is speaking live tonight. Everyone needs to watch that, by the way, the recording. I just didn't know where to share it, but I'm sure everyone on here will enjoy it. It was awesome. Thank you, Ahmed, for sharing that link. Which one is a better investment, Baba or Daily Journal? Daily Journal has a hidden 10-bagger, Journal Technologies. So I haven't dug into Daily Journal or Journal Technologies, but I'm pretty sure, based on the last Daily Journal annual meeting, that Charlie Munger said he wouldn't buy Daily Journal at the current price. He thought, it wasn't a compelling price point for him. And clearly, Baba is a compelling price point for him. So, based on that, I would have to say Alibaba is probably the better investment. I mean, because that's what Charlie Munger just voted for with his dollars. Rather than buying back Daily Journal stock, he bought Alibaba. So, I'm not going to argue with Charlie Munger on that. If a stock was trading at a 60% discount during Q1 2020 when compared to pre-pandemic, so, during March when everything was kind of at its lows is how I'm interpreting that, and it now is trading at 350% value from that of March 2020. Would you consider this as egregiously overvalued? So you're going from 40, what is that? 40%. So say a company is worth $10, okay? So this is saying you could buy it for a year ago, and now it's worth, what, 35? I mean, it certainly seems on the surface that it would be egregiously overvalued, but you really have to understand the business. I don't like making statements based on this little information. I mean, it's possible that the pandemic, right, has made this company that much better. It's possible that the way that this company was positioned in its market, in its sector, flourished because of the pandemic. It had some anti-fragile qualities to it. That it's just worth that much more now. Or it was such a small business that it was in a totally different phase of its business cycle a year ago than it is now. So you really have to understand the details to be able to answer that question. And you really have to decide, okay, what is this thing worth today based on the business prospects today? But it's an interesting question. Hi, Brad. Hope you're well. I am. Thank you. If Alibaba goes down to $200, will you add to your position? Thanks for all the content. No. I basically made a full bet on Alibaba last week. Okay. So, a 20% bet. I'm not going to add to that if the company drops. That's just how I approached it when I decided to buy. It won't bother me if it goes down to 200, but I consider myself fully invested in that position for now. Main risk of owning Baba ADR is risk of getting delisted in the USA or the Chinese government outlawing ADRs. What do you think of the pros and cons of buying Baba in Hong Kong Stock Exchange to mitigate this risk? Well, I kind of talked about that with the second comment in this Q&A. It'd be super interesting to hear Charlie Munger's take on this. I don't have much to add at the moment to that conversation. Hi, Brad. Thanks for your terrific work. Thank you, Werner. Werner, I believe, my German friend here. Which types of investors would you advise to have their money managed by a professional money manager instead of picking stocks themselves? And what do you think of Bonsai Partners? I love Bonsai Partners. It's probably the smallest investment management firm that I'm, think very highly of. And a company, a fund I'm learning more and more about, going deeper and deeper into. Types of investors would you advise to have their money managed? By a professional money manager. I'm really not sold on professional money managers. I think most people should just, passively invest in index funds, not with a professional manager, but with one of these, apps or services that kind of allow you to set it up and then get out of the way. So automatic, contributions every week, every month, whatever it is. And then it's just going into an index fund or a couple of index funds. So I don't know. I don't have much regard for professional money managers. I think you either learn how to pick stocks yourselves and manage, everything that goes along with that, the whole emotional psychology aspect to it, or you automate it using kind of the best practices available. S&P 500, maybe you include a couple emerging market ETFs to get international exposure. Obviously, you're also going to get some international exposure through the S&P 500 because many large corporations these days are not just in the U.S. but operate internationally. Hope that helps. Big fan of your content. Thank you, sir. Thank you for your detailed analysis of Baba. The more I am reading about this company, the better it looks from a valuation perspective. However, the company is going through an event. What are your thoughts on the $2.74 billion of anti-monopoly fines imposed on Baba? Will it change the evaluation, margin of safety, and price to book, or payback time of 8 years? How long will it take to recover from this event? Is your buy price still $216? At what price would you get really excited? So you may not have seen, Gaurav, I bought last week at $227 per share. Like I said, Charlie Munger buying in was the tipping point, was kind of all I needed to decide that I'm ready to go in to Alibaba. There's an event happening. The $2.74 billion fine, I was looking, it's 5% of the cash on Alibaba's balance sheet, okay? The current cash and cash equivalents. So, obviously it's substantial. Any one of us looking at that number, 2.74 billion, it's like, holy crap, that's a huge number. But you really have to take it in perspective. So, I remember when Facebook got slapped with a very large fine. I think it was it 2018 for selling data, right? I don't know what percentage of the cash that Facebook had around that, but that just, it came and went. Really didn't change Facebook's business. I see this as similar. It's easy to get worked up over it. It's easy to think, oh man, like, what does this mean? Like, is this going to have a domino effect for Alibaba? But I think it's just going to be something, all right, they pay and they move on, and it's not really going to impact the long-term business. So, again, my buy price was $227. I bought it $227. The fine isn't changing anything materially in my thesis. So that's it, guys. Awesome questions. Thank you all each week for showing up here and asking the fun and difficult questions. I'm going to have a little talk with myself to not ask such difficult questions on my page. I should ask on Investing with Frank's page or Investing with Tom's page rather than my own. But anyway, we're all learning here. Continuous learning is the name of the game. So with that, I will see you all in the next video. Be well.